Exelixis just shocked Wall Street, surging over 20% in a single session after crushing earnings expectation and raising its full-year outlook. In a market starved for biotech winners, is EXEL the next big thing, or just another earnings pop? Stick around because we are breaking down what just happened, what makes Exelixis special, and whether it belongs to your long-term potential. Exelixis, ticker symbol EXEL, is a biotech company focused primarily on oncology, cancer treatment. Its flagship product is Cabometyx, a therapy approved for renal cell carcinoma and hepatocellular carcinoma. It's not just another small cap biotech burning cash. It is profitable, has strong growth revenue, and a deep drug pipeline. In an industry that's known for binary outcomes, Exelixis stand out for its consistency and upside potential. Let's talk about why it exploded in late May. Exelixis reported a Q1 2025 earnings that bet Wall Street expectations across the board. Revenue came in at 482 million, topping estimates, while net income surged 31% year over year. But the real headline is that the management raised its full-year revenue guidance to almost 2 billion, citing stronger than expected sales of Cabometyx, a growth momentum in their new pipeline drug. Analysts are allowing this surprise of profitability and see room for upward revision throughout the rest of the year. Cabometyx, Exelixis crown gel, continues to dominate the market. Sales were up 12% year over year, and the drug is approved in more than 50 countries. It's not just maintaining, it's expanding indications like in thyroid cancer and combination therapies within checkpoint inhibitors like nivolumab. This kind of label expansion creates a multi-billion-dollar runway and makes Exelixis less dependent on new approvals to sustain the revenue. Let's look at the pipeline. Beyond Cabometyx, Exelixis have been reinvesting heavily into the future. The most exciting candidate is zensalintinib, the next generation tyrosine kinase inhibitor. It's showing promising results in multiple solid tumors. Then there is XL092, XL102, and XB002, all early stage candidates targeting various oncology pathways. While it's still early days, the breadth of the pipeline shows Exelixis is building for long-term dominance. Let's look at the financials. It has a market cap of 8 billion and a PE of 17, which is well below most biotech peers. It has a cash reserves of over 2 billion and no long-term debt. That means Exelixis is not only profitable but also financially stable, which is a rare in biotech industry. At current levels, they are getting growth, a drug pipeline, and solid financials for a PEG ratio below 1. That's deep value in biotech terms. Exelixis isn't doing this alone. They are partnered with big names like Bristol Myers Squibb, Ipsen, and Roche, licensing and co-developing major therapies. These partnerships reduce risk, provide access to global markets, and bring in milestone payments that pad the balance sheets. But there are some risks that you should know. Competition in oncology is fierce. Cabometyx will face challenges from newer therapies. Regulation risks still exist, especially in their new medicine and their trials. As a market cap biotech, Exelixis remain very volatile. Expect sharp swings and trial updates or FDA news. But compared to high-risk biotechs with no products or revenues, Exelixis is a much safer bet with cash flow and real drug in the market. Wall Street are bullish with an average 12 months target, which represents a 30% growth from the current levels. Giving earnings momentum and drug pipeline, that may actually be very conservative. Here is our take. Exelixis offers a very rare combination in the biotech market. It has real revenue, growing pipeline, clean balance sheet, and a proven cancer blockbuster. For long-term investor, it's a strong candidate for a core biotech holding. So should you buy it? If you are looking for a high quality biotech stock with real growth, real drug and real profit, Exelixis deserve a spot in your watch list. It's not a moonshot. It's a calculated long-term play in a sector that rewards patience.